The month of May was not kind to investors. Will the U.S. and China trade talks make it any better? Is there a risk of higher inflation with the developing trade wars? And is the Fed serious about rate cuts? The relative rotation graphs are now confirming May's risk-off sentiment to the markets. But could the buying resume and exceed the April lifetime highs? Do you know what's in your portfolio? If you don't, you should. If you want to know, we can help. Here's what's moving the markets and your money. I'm Charles Brown, Portfolio Manager with CB3 Financial Group from Chicago. It's Thursday, June 6th, and this is CB3 on 3. In political influences, the U.S. stock market was in no mood for any negative surprises in May, and yet it received several. President Trump slapped a 5% tariff on all products from Mexico to try to control illegal immigration. While it may seem to be a minor tariff, President Trump promised to increase those tariffs at 5% intervals over the course of the summer. After all the back and forth over the trade drama with China, the new tariff war on Mexico was seen as the last thing the market wanted to see. As a result, the selling escalated in May, with the S&P 500 falling, leaving May as the worst month in nearly 50 years. Here's my take on the political implications for our investments. Can political drama adversely move the market? For sure it can. May was almost as bad for investors as last December. In my estimation, at least 80% of the declines were due to the mercuric trade discussions between the U.S. and China, the U.S. and Mexico, and the brand new announcement that India would be losing its favored nation status with the U.S. While the markets are rattled due to trade war potential, the Federal Reserve stepped up on June 6th and got into the political fray. Here's what they said. In fundamental influences, Jay Powell, chairman of the Federal Reserve, signaled that the central bank stood ready to cut interest rates, saying it would, quote, act as appropriate to sustain the expansion amid the economic impact of escalating trade wars. Powell said, "We do not know how or when these issues will be resolved, and thus we are closely monitoring the implications of these developments for the U.S. economic outlook." The market rose 500 points on the Dow Tuesday in a response to that. Here's my take on the fundamental implications for our investments. I realize the U.S., China, Mexico, and now India trade issues are the biggest influence on the markets right now, politically. And yet fundamentally, with inflation still under control and even struggling to reach the Fed's 2% annual target, the Fed's willingness to reverse course and begin rate loosening will be very welcomed by the stock market. Expect the next Fed move to be a cut in interest rates, and expect it this year. In technical influences, the relative rotation graphs are confirming May's risk-off sentiment to the markets. You can see on the graph the downward arrows indicate short-term weakness for the U.S. stock market. Now this is rare. Most of the time when I do these updates, you will see an upward bias, but it definitely has turned down, at least for the short term. May's abrupt change of momentum has us pausing with any additional buying in our managed accounts. We now look forward to the G20 meeting of the world's leaders to see if trade deals can be made there. Next up after that are the 2Q19 earnings season. And please be sure to make plans to attend my semi-annual economic overview to clients, the Summer Fireside Chat. See the time and location here on the screen, and call or email us for more information. And that's CB3 on 3 for Thursday, June 6th. What's in your portfolio? If you don't know, you should. If you want to know, we can help. From Chicago, I'm Charles Brown at CB3 Financial Group, where we don't just manage your assets, we become one of them.